This episode of the Alt Goes Mainstream podcast is brought to you by Ultimus, a leading full-service fund administrator for asset managers in private and public markets. As private markets continue to move into the mainstream, the industry requires infrastructure solutions that help funds and investors keep pace. Ultimus is a leading full-service fund administrator for asset managers in both private and public markets, offering a wide range of capabilities across registered funds, private funds, and public plans, as well as outsourced middle office services. Delivering operational excellence, Ultimus helps firms manage the ever-changing regulatory environment while meeting the needs of their institutional and retail investors. Ultimus provides comprehensive operational support and fund governance services to help managers successfully launch retail alternative products. Trusted by institutions, investment consultants, registered investment advisors, state governments, and fund managers, Ultimus provides solutions for nearly every investment structure in the marketplace. Visit www.ultimusfundsolutions.com to learn more about Ultimus's technology-enhanced services and solutions, or contact Ultimus Executive Vice President of Business Development, Gary Harris, on email at gharris@ultimusfundsolutions.com. We thank Ultimus for their support of Alts Going Mainstream.
Everybody gets a piece, we're going mainstream. Everybody's gonna eat, we're going mainstream. All my family is sing. See you on Main Street, we're going mainstream.
From Wall Street to Melrose Avenue,
We're going mainstream.
venture capitalists to athletes to
We're
creators
going mainstream.
to the person who's collected trading cards
We're going mainstream.
in a collision of culture and finance.
We're going mainstream.
Welcome back to the Alt Goes Mainstream podcast. Today's episode dives into the nuances of enterprise software and how to build a scaled specialist alternative asset manager. We sat down in Vista's New York office with David Breach, Vista's president and chief operating officer. David sits on Vista's executive committee, the firm's governing and decision-making body for matters affecting its overall management and strategic direction, as well as the firm's private equity management and Vista Private Equity Fund's investment committees. David is also the co-CEO of VistaOne, Vista's evergreen private equity vehicle, and serves on the investment committee and board of directors. He also sits on the boards of Vista's portfolio companies Jamf, Solera, and StatsPerform. David, who has been instrumental in helping the firm chart its growth path to over $100 billion in AUM, joined Vista in 2014 after a career as a partner at law firm Kirkland Ellis, where his practice focused on representation of private equity funds in all aspects of their business. David was a member of K&E's 15-person Global Executive Management Committee and a founding partner of its San Francisco office. David and I had a fascinating and thought-provoking conversation about private markets and Vista's evolution. We covered how Vista grew into a scaled specialist firm, the journey from $13 billion in AUM to $100 billion in AUM, the opportunity in enterprise software investing, the reason why Vista decided to build out a dedicated wealth solutions business, and how to differentiate in the wealth channel. Thanks, David, for coming on the show to share your wisdom and expertise in private markets.
We're going mainstream.
David, welcome to the Alt Goes Mainstream podcast.
It's great to be here. Thanks for having me.
Well, thanks for having me in the Vista office. We have a good view in the background of the Empire State Building. So much to talk about in terms of your career. You had a fascinating start to your career, which we'll get into. We'll drink that up a little bit. And then I think you know what I mean by that reference. And then we'll get into the evolution of Vista, how you built the business, how you evolved to also build out a whole wealth channel business. So first, would love to start with your background. You didn't start in finance.
No.
You started in two pretty interesting places as it relates to what you do today. So would love to hear how you ended up at Vista today.
Sure. So I tell my kids, like, don't use my career path as a map for what you want to do. But I grew up in a family. My father was in the food industry, and my first job was in the food industry. So I started off as a food salesman, and I started working full time when I was 19 years old, and I did that for about 5 years, and then I had the idea to go back to law school, and I went back to law school, and really during law school just fell in love with that. And became a corporate lawyer. I was living in Michigan, in the Detroit area, started practicing law, and I just realized that's what I was meant to do in life. And it was just something that I took to, and I liked it, and I worked very hard at it. And then I ultimately moved to a firm called Kirkland Ellis in Chicago. And it was at that point I really fully focused my career on the alternative space. And so back then, Kirkland was one of the few firms that was really focused on private equity. And so I really, as an M&A lawyer, focused on representing private equity clients. And I just love the industry, love the clients, love the way the pace at which they moved and the decision making and the way they thought about risk and managing risk. And so from there, I ended up being asked to move out to San Francisco and open up a new office for Kirkland. I think at the time I was about 8 years into my legal career. And one of the great things that came from that is I met Robert Smith, the founder of Vista. Robert had started Vista in 2000. And, when he started the firm, it was really the only firm back then that was really focused on, enterprise software as a buyout strategy. And so I met Robert when the firm was about 3 years old. I started doing work with him and with Vista. I built out a whole bunch of other clients. And it just ended up really being a good time to be in that part of the world. And so I ended up being part of growing a very large office for Kirkland, ended up on their global executive committee, and was happy, loving life. And then I got a really fateful phone call in the summer of 2014. It was Robert. And he said, "Hey, David, I want you to come to Austin and I want to talk to you about joining Vista." And it was not a call I was expecting. I kind of thought I knew what I was going to be doing for the next phase of my professional life. And I kind of hung up the phone and I was like, holy crap, that was like a call. I called my wife and I said, "Honey, you're not going to believe this. Robert just called me. He wants me to come to Austin." And needless to say, I met with Robert and he really talked to me about his vision for the firm. At that time, we were about 13 billion of assets under management. I think we were about 100 employees. And he really articulated for me why he was so bullish on software as a place to invest. Obviously, I was very familiar with the general momentum around the alternative space, and I really, got sold on his vision of what Vista could be. And he really said, I need help growing the firm. I want you to help me build out the firm, build out the infrastructure, build out the ability to do more deals at a higher scale, help me institutionalize the firm, because he really wanted to build a firm that would really be a multi-generational, kind of firm built to last. And so needless to say, his vision was compelling. I made a big career pivot, and I'm coming up on almost my 11th year here at Vista. I originally joined as COO of the firm, and then I think it's about 5 years ago, was made president of the firm.
Congratulations on that career path. 25 years for Vista as well.
Yes.
This 25th anniversary. So that means Vista was 14 years in when you got that call from Robert.
Yeah.
What was the vision that you and Robert discussed when you were thinking about joining Vista, and what was so compelling about it?
Yeah, I mean, part of it was just the way that software is transforming every industry, and how important it was for companies to really technology enable themselves, right? Software is one of the most productive things that a company can spend its resources on. So, he sold me on the compelling nature of the software business model. And then he really sold me on his vision of what he wanted the firm to be, that, he was really thinking about wanting to build a true institutional firm. I was representing a lot of different private equity firms at the time. And, some aspired to be institutions, and some, the founders just wanted to do their deals and make money, and that was good enough. And, Robert had a bigger vision for what he wanted. And I'd been part of building something at Kirkland, and it was just compelling for me to be part of building with Robert.
On that point, I want to unpack what you just shared about seeing a number of different firms at Kirkland. You had the privilege of working with a lot of different firms. I think you said once, about 60 transactions a year. So you're working with a lot of different firms, a lot of their companies, maybe some of their LPs. What do you think were the biggest lessons you took from that experience, seeing a lot of different firms, working with them, that you've applied to being a business builder at Vista?
Yeah, so, one of the big questions is, how much of successful investing is science and how much of it is art? And Robert, as an engineer, wanted to try and figure out how much science could you bring into the equation, right? So Robert's very early vision was, let's help companies operationally transform. So we're not going to try and financial engineer our way. We're not going to try and be the best stock pickers, but let's buy good companies and really bring them resources and knowledge. And, people talk about the Vista playbook or our best practices, but how can we bring resources to these companies to really help them go to whatever their next level of success is? And, I had other clients where I would look at a firm and I would say, that particular investor, that woman, that man, that one's pretty special, and I would give money to that person. But others at the firm, maybe not so, maybe not so much. Like if the firm didn't have that special person, and obviously we think all of our people are special, but we all want to enable them with capabilities, with resources. We want our outcomes to be more predictable. We want to feel confident that we can control the outcome as much as we can in these investments. And so I think that approach, and that's really the way Robert talked to me about how he thought about their investment strategy, and that was very unique as I talked to him. I hadn't heard other clients of mine talk that way, and so that was for me a pretty interesting insight.
On that point, what do you think is the most important part of an investment process? The way I break it down is, and maybe this is a bit more venture oriented than buyout oriented, but it's find, pick, win, help. Those are broadly speaking, the four categories of the investing process. Is there one part of the process that is more important to you than others, or because you can help companies so much with the value creation team and what you're adding to their business, is there a certain part that really tips the outcome of an investment in your favor more than others?
Yeah, I guess I would say, like, we do very deep operational diligence because we're trying to figure out where can we be helpful. Or there might be a company that's doing something well, but it's not going to scale. So they've been able to get themselves to 50 or 100 million of revenue, but as they go to 300 million of revenue, their processes and the way that they're managing their business is not going to scale. So I think first and foremost, we do very deep operational due diligence. And I think, we'll get comments from different founders or owners of businesses that will say, like, you folks talk to me about my business in a different way than other investment firms talk to me. And so I'd say first and foremost, you've got to have a deep operational understanding so we can decide, here's where we think we can be helpful. And if we don't think we can be helpful, then it's maybe not an investment we want to make, right? And then I think the second really critical area is getting very aligned with that founder, that owner, that management team about where we think we can be helpful, and them kind of agreeing and saying, yeah, that is an area that I need help in, and getting very aligned on what we're going to do together during our ownership period. And so I think going into an investment where you don't have that alignment is a real problem. You can't get people to do things they don't want to do. You're not there every single day. And so you don't want to be in a meeting where everyone's like smiling and nodding and everything, and then you walk out of the room and they're, yeah, we're not doing that, right? And so I think feeling like we've got deep alignment is, I'd say, the other key cornerstone as we're looking at an investment, making sure that we've got that alignment.
Is there a Vista founder, executive, or team? You look at an investment, are there certain qualities that you look for?
We're looking for people that want to learn. If you're talking to someone who thinks they've been there, done that, know it all, they're probably not going to be that interested in taking any help or advice from you. And as I think about during my time at Vista, where we've had some of those types of executives, it invariably doesn't work out. If they've got their way of doing things and they're not open to any new thoughts or new ideas or new approaches, then, we're just money. And we don't want to just be money to our companies. We want to be a resource for them. So, I would say, again, getting that alignment is critical, and really making sure that that alignment is sincere and that they really do want us on the next part of the journey, I think is really important.
I think that's a good segue to Vista building itself as a platform. So you mentioned when you started at Vista, about 13 billion, 100 people or so. Today it's around 100 billion.
Yeah, a little over 100 billion, probably 700 total employees.
So you've had to scale the business of Vista. You had to do that in lockstep with figuring out how to create capabilities that would add value to the companies that you're working with. How did you approach that journey?
Yeah, so I think there's probably two or three big parts to that question, right? So one is I think that we do a very good job of leveraging the scale of Vista for the benefit of each of our companies. And what's interesting, we want to participate through the entire software market. So we will buy a company that might have 10 or 15 million of annual recurring revenue, and we have companies that have 4 or 5 billion of recurring revenue. And so part of what I think our value creation team and our value creation framework helps is to do things at scale. And oh, by the way, like we, invest in companies where they teach us things. And so we might learn something new and we're like, that's great. How do we export that to 90 other companies? And so I think as we've gotten bigger, that we've stayed very focused on is how do we leverage the scale of Vista for the benefit of all of our companies? And so we might have a company that's never had a center of excellence in another jurisdiction, right? Where they're either trying to get leverage on talent or leverage on wages. We've done it, 100 times. And so like, how do we bring the scale of that and how do we connect people to each other to learn from each other's, trials and tribulations? So, one part of it is that. Another part of it is just building out the scale of Vista and making sure that we have the resources that we need to both deliver for our investors, all the things they expect, whether it's from a compliance perspective, from a reporting perspective, from a service perspective, but really making sure the whole organization knows why we exist and what we need to deliver to our investors and to our companies. And, one of the things, when Robert first hired me back in 2014, he said, listen, whatever we need to do, like we know we've got a great opportunity in front of us. We want to make sure that we're making the investments that we need to actually capitalize on the opportunity. So, over the course of, my time at Vista, as we've needed capabilities, as we've needed to expand, whether it's our compliance function as we got bigger or our finance, other things, I've always had great support. Like, let's make the investments that we need to make sure that we are being the fiduciary that we're expected to be. Then the other thing that I went through during my time at Kirkland, where I started an office of like 10 people and ended up with 300 people, and then was, part of a global executive committee of a very large law firm. Things that you do when you're, 100 people don't always work when you're 700 people. And so how you try and have the culture permeate all of your folks, how you make sure everyone understands what the expectations are, what the mission is, what our values are, how we want to conduct ourselves. You have to think about it in a different way as you get bigger, and you have to install different systems. You can't just do it all one-to-one. You have to think about other things that maybe you're not even accustomed to or comfortable with, but you need to do it. And so, so part of it's been that as well.
I want to hang on to the culture and values piece because I think that's also instructive to how you decided to build a wealth business. I often think of a wealth business as a reflection of a firm's values and DNA and culture, and it expresses itself in how you built that business and what the investment culture ends up being. What in your mind are the values and DNA of Vista?
An expression that Robert has had for years that I think really permeates the organization is honoring the opportunity. We're very fortunate to have these roles. We're very fortunate to be in this industry, to have these opportunities. And so first and foremost is honoring the opportunity. Operating with integrity, I think has been critical for us. People need to know you mean what you say what you do, you follow through. Pursuing excellence. Again, as you get bigger, it gets harder. Like you have to work at it more to make sure that people understand what the standard is and what we're all holding ourselves to. And so I think making sure that you're recognizing your highest achieving employees and that they feel appreciated. And then to the extent that you have folks that aren't meant for you, dealing with that too, which a lot of people don't like to do, I think is a core part of pursuing excellence. So I think, those are some of the core elements. I think in terms of as we've built our business, I think the other guiding principle has been, can we do something that is going to be differentiated and is going to be valuable for whoever that particular customer is? So, we're not in the business of just trying to gather assets and scoop up AUM. For example, when we thought about the wealth product, the core of our business is serving institutional investors. We happen to be in an industry that fortunately is like the largest part of the global economy and is still growing 17, 18% a year. So as we think about enabling our investors to capture the largest part of that opportunity, we want to make sure that we have adequate capital for the opportunity. So as we thought about should we have a wealth product, I think we've been very thoughtful about we want to do it in the context of supporting our institutional business. And so we're not trying to raise every dollar that people will give to us. We structured the product in a manner that it's investing alongside of our funds as opposed to competing with our funds. And so we try to really think about, okay, what's going to enable us to be better to all of our stakeholders, and let's design it that way. So I think we tend to be pretty thoughtful about these things because I think we've got a terrific business and we don't want to screw it up. And so I think we've, as same thing as we thought about our credit, why should we be in credit? What can we bring to the credit space that isn't already there? Like, why does Vista need to be, right? And so we've tried to be thoughtful about these decisions along the way.
On the point of the wealth business, how did you think about structuring things that were reflective of what you wanted to export in terms of staying true to your DNA and your values, but also doing it in a way that was scaled enough? Because it's a real investment to invest in a wealth business in terms of hiring people, operational processes, reorienting investment teams, spending money on marketing, all sorts of aspects go into building that business. So how did you think about doing it in a way that was reflective of who you are, but also balancing with the fact that it requires a real investment to do it?
Yeah. So the first part is the second part, which is when Robert and I first started talking about how should we participate in the wealth space, we both spent a ton of time actually educating ourselves on the wealth space. What does it need? What are the different attributes of a wealth investor versus an institutional investor? How does the product need to look to give them a good experience, what have you? And so we spent a lot of time really getting, I'd say, smart about the wealth space. We then, once I felt like, okay, I think we know what it's going to need, then we sat down and said, okay, is this an investment that we're willing to make? And part of that was really mapping out, okay, we've got this platform that can deploy capital at scale. At what scale can it actually deploy capital, right? And so let's look at our historical deployment and let's think about, okay, if we had additional capital, are there more things that we could do? But how much additional capital do we really need given what our platform is capable of doing? And so we really did a bunch of modeling to say, okay, this is what we think. If we raise this in the wealth channel, we think we can effectively deploy it alongside our institutional capital, as well as our co-invest capital, which is very important to our institutional investors. We think that's kind of the right size. So we said, okay, if that's the right size, does it make sense to make all this investment? And our answer was yes, we think it does. And so that then really set us on our way to say, okay, now let's build out the right team. And we hired a fantastic guy, Dan Perrant, who came to us from KKR, who was really, along with a few others that were really the core of starting this. And then Dan helped us get it even another layer smarter. So even though we could raise a bunch more money, we're going to kind of stay true to what we modeled out. And so we've kind of constrained, but again, we want to stay true to what our strategy and thinking was on it. And that's hard to do.
You bring up a really interesting point, because that was where I wanted to go with that. Was there's so much opportunity in the wealth channel. There's so many untapped investors who can have access. A high quality firm with a high quality product can generate excess demand relative to what they feel that they can appropriately deploy. How do you think LPs should evaluate whether or not a firm will stay true to that? You can sit here and say, hey, we are not going to take in excess amounts of capital relative to the deal flow we have. But I think it's such an important point in this space of a firm right sizing their evergreen strategies for the deal flow they have? And you just touched on that point. So from an LP's perspective, how should they think about that?
I think you just have to watch the behavior, right? Like if we say, again, I don't want to use, numbers here, but, we talked to our investors and said, this is the amount of capital that we think we can effectively deploy in an evergreen structure. If we raise 2x that capital, then my investors, institutional investors should be saying, what are you doing, guys? But we haven't. We've actually stayed true to what we said we think we can do. So I think at the end of the day, like our investors are they're very sophisticated. They work with a lot of very sophisticated GPs, and I think they just watch and they see kind of what's, how you're behaving, and are you following through on what you articulated? What was your strategy? Why are you doing it? How are you managing their concerns? And I think if you stay true to those things, you get a lot of credit, and they say, okay, they're kind of doing what they said they were going to do, and we appreciate that. And I think if you vary from that, then if I were an institutional investor, that's what I'd be focused on.
How do you think institutions are approaching this whole wave and market structure evolution where the wealth channel is becoming a increasingly important part of many GPs' business, and that ultimately manifests itself in co-investment capacity, in deal size? What do you think that institutional investors are thinking, and how have you managed to balance those challenges, let's say?
Sure. Listen, I think they're concerned, and I think they have a right to be concerned, because I think if I was an institutional investor, I would be concerned about, is your strategy going to drift? Are you going to underwrite differently? How is this capital going to affect the opportunities that you said you'd provide me? So I think there's every right to be concerned. And I think, our approach has been to be very transparent and direct about what we're doing, why we're doing it, and how we're going to do it, to try and alleviate those concerns, because the concerns are like real, and in some respects they're obvious concerns that they should have. And so I think if you address them and then you actually follow through with how you're addressing them, again, I think that hopefully makes them okay, you guys said you were going to constrain it, you're constraining it. Appreciate that. You said you're going to continue to offer me co-investment opportunities, you are offering me, right? I think if they see you going in a different direction, then I think they're going to have to say, is this still a GP I want to invest with or not? And at the end of the day, investors get to vote with their feet.
There's another interesting aspect of all of this, which is there's some industry trends that are also related to the growing amount of capital coming into private markets from new investors like the wealth channel, which is private companies are staying private longer.
Mm-hmm.
The large majority of companies with 100 million revenue or greater in the US, and same in Europe and Asia, 87% in the US, are privately held. And maybe they have continued reason to stay in private markets. There's now other liquidity mechanisms. The number of companies that have been listed in public markets has almost halved since the early 2000s. Yep. Is that changing the dynamic of how much capital can come into private markets in categories like private equity, and particularly enterprise software, where these companies can continue to grow in private markets? There's other liquidity mechanisms for it as well.
Yeah, I mean, what's interesting, again, to speak specifically to software, 96% of the software market is private. And I think the estimate is by 2030, it's like a 59 trillion global market cap. It's continuing, as I mentioned earlier, grow 17, 18% a year. So our machine can, needs capital to take advantage of this opportunity. Not infinite capital, but certainly I think as we've grown our capital base from, 13 billion to, a little over 100 billion, if you just did the math on the growth of the industry, you'd say we've sort of kept up with the growth of the software industry in some respects, right? More broadly speaking, yeah, I think the private markets are bigger. If you look at different prognosticators about the penetration of alternatives in the non-institutional wealth space, like you can get to some kind of crazy numbers, right? But I think the other interesting question is, are wealth investors, what should be their right allocation? Like, should they Should they be in the Yale model? I'm not sure that they should be, right? And so I think they're underexposed to alts. And I personally, again, having been around the alt space for 30 years, like I'm a huge believer in actively, like, investing with people where they own the company, they control the company, they can make changes. If something's not going right, you can change managers if you need to. It's not just, oh, I get to sell the stock. So like, I'm a huge believer, and if you saw my own balance sheet, you'd see how leaned I am to the private markets. So I'm a huge believer in the private markets, and I think it's great that more people will have access to it. Because if you really think about it, there is a part of the population that has had indirect exposure to it because they have pensions, and so so they're getting exposure to it. But there's a vast swath of people that have 401ks or might have financial advisors and whatnot that have really not had much exposure to alternatives. So I think it's great that we're expanding the exposure. How expansive it should be is there's smarter people than me can opine on that. But I do think the private markets can certainly support growth in this space.
On that point, and one layer deeper, so investors should have some level of exposure to private markets. I think we probably both agree on that. How much can be debated by others as well. Peeling it one layer deeper, enterprise software. How should investors think about enterprise software within their portfolio? Because it does feel like enterprise software has some characteristics that maybe make it look different from other aspects of other parts of a market, call it a consumer company, or even other parts of private equity, venture, et cetera.
So I think there's a few interesting things about investing in software. So, most of our businesses, they have over 90% of their revenue is recurring revenue. So they wake up in the morning and they know where 90% of their revenue is coming from if they don't sell another product. Most of them have greater than 90% customer retention rates. A number of our companies, they start off the year, they know where 103% of their revenue is coming from for next year, right? On a net retention basis. So these are businesses that, when operated correctly, tend to be very resilient businesses. They tend to generate a fairly high amount of free cash flow. They tend to have customer relationships that are very deep. We generally want to invest in products that we believe are very sticky, and that the switching costs of your end customer are quite, high. So I think they tend to be very resilient businesses if you buy the right companies. And then the other interesting element of software is there's a natural diversification when you invest in software that is just inherent in software. So there's no business that does not use software. So you pick an industry, there's all sorts of software running through that business. So, when you invest in a portfolio of software companies, you're getting exposure, to 10, 12, 15 different, parts of the global economy. And so you're not exposed to just, energy or automotive or, retail. You've got exposure across a whole, panoply of different industry verticals. So I think it's a really interesting, you're buying resilient businesses that in general have very long-term customer relationships. And once we get done with them, have long-term customer contracts, and provides an innate level of diversification. So, we think that software as an asset class should be in a part of everyone's portfolio. I think the other thing that's interesting is we sit here in the world of the revolutionization through generative AI. We think that software and enterprise software is going to be a really important way to take advantage of the AI revolution. And as you think about what are the waves of AI investment and innovation, right? It started with all the investments in the chip technology to enable Gen AI and the build out of the models. You've then got a whole play around infrastructure, whether it's the hyperscalers, whether it's the data centers, whether it's power generation. But then you've got the wave of the application layer, and ultimately all this technology is fantastic, but it has to be applied to your businesses. And what I think people underappreciate a little bit is large enterprises, they've got very critical needs, whether it's security, whether it's protection of their key data, their customer data, what have you. And we really believe that, our businesses have existed in these industries in many cases for decades. They understand the workflows. They've got all of the industry's data running through its software. And so we should be best positioned to leverage the Gen AI technology for the benefit of that industry and for the benefit of those customers. And so, there's a lot of talk about, is Gen AI going to disrupt software? Is it going to feed software? We think it's food as opposed to it's going to eat us. But you have to get after it. And again, I think that's one of the really interesting things about how we approach our investing is if you go back to this whole, we want to provide resources to help support our companies in their evolution. Well, that's exactly what we're doing from a Gen AI perspective, right? So we're helping our companies understand the technology. We're partnering with key industry participants to help our companies accelerate their Gen AI journey faster, to create more agentification within their products at a faster rate. So we really believe we're positioned to win as long as we get after it. And, we are fully getting after it.
What are the ways in which you're getting after it with companies? Are there certain aspects where you're applying either Gen AI or agentic AI that's really driving value for the companies and ultimately your investments?
For sure. So, I would really kind of take it in three different, buckets. So, one bucket is, how is Gen AI going to improve the operations of the software company itself, right? So they're going to write code more efficiently. They're going to provide more efficient and more effective customer support. Other functions like finance and marketing are going to get significant leverage out of Gen AI solutions. So we believe that our companies will get innately more profitable by the implementation of Gen AI in their own operations. So they will be able to support larger revenue streams with a lower cost basis, right? So they're going to get more. We're seeing it happen, and that's going to continue to happen. Then you go to the product side. Every one of our companies has got product enhancements that are incorporating Gen AI technology. In certain cases, that's just making the product stickier and more effective. In other cases, it's creating new pricing opportunities because it's the product itself is providing more efficiency to the customer. And then you go to the next layer of that, which is the agentification of software, which is really creating agents within our software that is literally doing the work of humans, right? It's rather than you write an email and Gen AI helps it sound better. This is no, the agent's going to write the email and you're never going to write the email. And so, I've got an agent writing my emails now. I don't have, and so, one of our companies provides a solution that helps monitor IT infrastructures. They've created a whole set of agents that are providing major cost leverage for their customers, and they're trying to capture their fair share of that cost leverage. So they're seeing with some of their customers the ability to upsell by 50% the customer contract because there's so much value being delivered to the customer. It's pretty remarkable. And so that agentification, I think, is going to create new revenue opportunities, going to open up new, addressable markets for some of our companies. And we think is really on the revenue side is ultimately the big game changer.
Do you think today, with what AI is doing, is it more cost savings and help with operations than it is net new revenue generation for companies?
I'd say what we're seeing in terms of actual financial results, you see the cost savings quicker than the revenue. But we are for sure seeing revenue opportunities, and I think over the next 12 to 18 months that will just continue.
When I hear this, I think of even just on the operational improvement side translating to increased EBITDA margins. Obviously, that changes the rule of 40. That in and of itself is material and meaningful, and that probably increases multiples on the business. How does this change enterprise software from an investing perspective?
To your point, for those in the audience that don't know what the rule of 40 is, we use a metric to try and assess the efficiency of a company where we look at their top line revenue growth rate and their EBITDA margin, and those two numbers should be at least 40 if you're kind of resourcing it. So if you're a 10% grower, you should have a 30% EBITDA margin, to use a simple example. we think that rule of 40, potentially gets to like a rule of 60 because there's going to be these margin enhancements over the course of time. I think that when you've got more free cash flow, it opens up more room for investment and opportunity, right? So when you're saving money, sometimes you let it drop to the bottom line. Other times you say there's investments that we could make that we could accelerate more growth, depending on the particular market you're in. So I think at one level, investing in software, you're going to have to think about, is this resource allocation in the right balance in this new paradigm of generative AI enablement? I think the other thing that's interesting is, for example, in the middle market, very large companies, they have in general the resources and the access to talent to figure out a lot of this stuff, right? A lot of the middle market doesn't. And so for someone like us where, we invest across the spectrum, we're buying a bunch of middle market companies where I don't think anyone is pricing in the Gen AI opportunity, but I think we are uniquely able to deliver the Gen AI opportunity to these companies. So I think as a matter of, thinking about the investment landscape we're in, I think we've got really interesting opportunities where we know there's going to be certain things that we can do with these businesses from a Gen AI opportunity that other buyers may not, underwrite or see the same opportunity.
How much of an edge is it for Vista to have this expertise and competency in Gen AI when it comes to both winning deals and then helping companies?
I think it's a huge edge. And I think, again, we're kind of in the early innings of all of this in some respects. It's kind of funny. We're always of a mindset, we get told by investors and others that, we're one of the leading ones in terms of being out there trying to pursue the Gen AI opportunity within software. But, our mindset is we're behind. And so we're continuing to push. So yeah, do I think it's an edge? Absolutely. I do think it's an edge. And I think that over the next several years, that edge will become more, to the point we made earlier about, okay, you're seeing some cost savings. Are you seeing the revenue side? I think that edge is going to become more and more apparent. Certainly it's an edge with companies that we're trying to buy. Again, like when you can talk to a CEO who's trying to figure all this out and you tell her, like, we can help you figure it out. We can bring these resources. We can bring these key strategic partnerships that can accelerate your journey. It's pretty compelling for folks.
Do you think a lot of the CEOs that you either talk with or work with, do they grasp the Gen AI opportunity? And does the ability to use Gen AI or agentic AI and have it cascade down the organization, does that have to come from top down?
To your first question, do they grasp it? I'd say, it varies. I think some understand it deeply and they're very focused on it, and others, oh yeah, this is going to help me with code generation, but I don't know much beyond that. So you see it vary. I do think, and we even see it within Vista, it really has to come from the top down and it has to come from the bottom up, right? Like a lot of, there's some, I kind of think about Gen AI, there's some like big wins where you can like crack boulders, but then there's like a lot of stones that you can deal with too. And the stones get dealt with in people's daily lives. And so if you enable them with tools and encourage them to experiment, they find lots of little wins while you're kind of attacking some big boulders. And, like just even in my own, job, like I'm using Gen AI all the time now, and it's making me seem smarter than I am. It's making me more productive than I otherwise might be. And so I do think you need to not just encourage it, but really insist and hold people accountable. And last week I had every one of my key functional leaders take me through, everything they're doing on Gen AI within their functional area. And I literally said, tell me about the big boulders. And then I want to understand what you're doing to enable the stones and how you're encouraging your people to embrace it. Because, again, for the average worker, it's a little bit hard to like, how should I think about this? Am I going to replace myself here? And I think those folks that embrace it and really learn what the power of these tools are and how it can enhance what they do, I think they're going to be the ones that succeed as this, as this whole revolution continues to occur. I think if you, kind of like, I don't want to learn it, I don't want to deal with it, I want to pretend it doesn't exist, I think it's, has the prospect of running you over. And certainly, I tell my kids, like, you need to embrace this stuff and make yourself valuable with it.
How do people best learn how to use AI?
I mean, just speaking from my own experience, is you have to, number one, get it on your devices. It's hard to learn it if it's not on your devices. And then you've just got to start experimenting with it and starting to understand the power of it. And I routinely have examples where I'm like, wow, I didn't know it could do that for me. And I actually had one over the weekend where I was with Parents Week, and I was with my daughter and some of her friends. And I had, given a speech at Michigan earlier this year, and one of the kids said, "Oh, I haven't seen it. I'd like to see it." And I kind of under the table, I said, "Summarize the key points of David Breach's University of Michigan commencement speech." And literally in like 14 seconds, it spit out a summary, and I'm like, "That's a darn good summary." And I said, "You don't need to watch the speech. Just look at this." And it was like just remarkable to me that like in that quick of a time period, I got something that was actually quite good for something that's basically like a YouTube video. So I just think you've got to experiment with it, start to understand its capabilities, and then start to think about what are the workflows in your daily life that this is going to enhance.
So where my mind goes with that is the kid who gets to see this summary of the video. They may not go and actually watch it and learn it on their own. What do you think are the skills then that younger people will need to have in an age of AI? We both didn't grow up with that in our working careers. What do you think is going to be critical for younger people since they have AI at their fingertips?
So again, I think, do they understand what it can do, and do they know how to get that out of it, whether it's the prompt engineering element of it or whatnot, I think is one piece of it. I also think we're going to have to really think through what are the skills that can't get replaced by this. Like what are the things that make you good at a function that it can't do versus what it can do? And so can you devote more time to the things that, you're able to bring to the table? One of the things I always worry about with kids, and, you and I have talked about this before, the way that our kids interact with each other is so different than when we were kids, right? Just the amount of electronic interaction that occurs as opposed to like live, personal interaction. And I really worry about that because like learning how to deal with people, learning how to understand people, learning how to read what's going on with someone, and am I getting through to you, not getting through to you, have I offended you, have you, right? Like those sorts of skills you get through the trial and error of a lot of human interaction. And I worry a lot that our kids are getting less and less of that, and they're not learning those things. And those are actually the things that Gen AI won't be able to replace, right? And that's what I worry about.
Are there things you're doing to actively help your companies in that regard? You're helping them with Gen AI and applying it in either cost savings or revenue generation capacity. But are there things you're doing to help upskill or prepare teams and executives at the companies you're working with to deal with just that?
Yeah, again, I think part of it is understanding in your employee base what are the things they can uniquely do as a human that this can't do, and then are you enabling them to do their highest and best work, right? Like part of in the current framework, a lot of what Gen AI is going to deal with is kind of in some respects, it's kind of the work people don't enjoy doing. I think someone said, dumb, dirty, or dangerous. Like, let's get rid of all that stuff, right? And so, like, we all have parts of our job that it's like, I didn't realize I had to go to college to do this. Like, this seems kind of rote stuff, right? And so getting that stuff out of your day should enable you to be way more productive on the stuff that really utilizes your creativity, your EQ, your strategic thinking, what have you. And so I think understanding what you're taking away from your employees' daily life, and therefore what should they do more of. Most of our companies are growing, so they should be able to grow without adding a whole, historically it's like, oh, we're growing, we got to add more people, we're growing, got to add more people. Well, now we're going to grow and we're not necessarily going to need to add more people, and those people are, I think, going to be doing more valuable activities because the lower value stuff is going to get, taken away.
It's interesting where my mind goes on what you just shared. And then also, if we rewind the tape to what you were talking about when it comes to the characteristics of an enterprise software company, sticky customer base, mission critical, just the features of what an enterprise software business is, you tie those things together, it actually is to some extent what wealth managers are in many respects.
Yeah.
And that's where my mind goes. Not only have you built a wealth business focused on serving the needs from an investment perspective for the wealth channel with the suite of products that you've built, but you've also endeavored to help these wealth managers think through their own application of
Right.
things like Gen AI. Why do that, and what are you doing there to help the wealth community understand the impact of Gen AI? Because you see it every day in the
Yeah.
businesses that you're working with.
Yeah, I mean, again, we really think about how can we be a value-added partner. We do this with our institutional clients. We think about how can we be a value-added partner to you? Are there other technology issues? Like we've worked with sovereign wealth funds as they're thinking about their country's economy and how they can digitize it more and how can we be helpful to them. So we kind of take the same approach in the wealth space, that we want to be a value-added partner, and we want to take this expertise that we've developed and benefit in other ways to we're in a very competitive environment, very competitive industry. So if you can be value added in other ways, that's obviously what we want to do. And I think, again, like even if you think about the wealth space, there's elements of what a wealth advisor does that Gen AI is going to do better. But Gen AI will never be able to look their customer in the eye and say, okay, like what's going on with you right now? What are you stressed about? What are you stressed about financially? Like, what's your real risk? Everyone fills out like a risk tolerance thing when you're getting an advisor, but like, I got to look you in the eye and see how you're feeling when the market's, dropping by 15%. And so that's the kind of thing that human, element is not going to be replaced by Gen AI anytime soon. And so we want to help our advisors understand that.
What advice would you give to advisors on applying Gen AI, having seen the companies that you're working with at Vista go through the process of applying Gen or agentic AI?
Yeah, I would say there's some broad-based tools, whether it's a Chat GPT or Claude or Copilot. Make that stuff available to your employees, encourage them to use it, find these quick wins. One of the things that you have to fight is there's a little bit of a tool proliferation thing that you have to worry about. So even within our business, everyone hears, oh, so-and-so's using this tool and so-and-so's using that tool. And like, we've got to take a step back and figure out what are the key tools that are going to solve the big problems? What are the general tools that can solve a lot of the small problems? And if you're asking for a tool, I need to know, is it solving a big problem or a small problem? Because if it's a small problem, then I'm going to push you towards what I'll call one of more of the general language model tools, as opposed to some purpose-built tool. But I think getting your employees to embrace that this is happening and experiment with it and find out how it can make your day more effective, that's partly, I think, what you need to push every employee to do, because they're all going to find elements of their job that these tools are going to enhance and allow them to focus on higher value activities.
I think what's so fascinating about that is we're at a time where this really does feel like the next wave or platform shift within software.
Yes.
You've been at Vista for a little over 11 years, 25 years as a firm. You've had a vision, grown it from 13 billion to 100 billion. What's the next wave of that vision at Vista as you think about being in the context of the broader platform shift of software?
Yeah, I think we want to be the preferred firm to help companies as they adapt to this new platform shift. When software went from on-premise to the cloud, we helped more companies with that transition than I think any other investment firm, and we almost treat it like a factory process as we did it time after time. And like, how can we industrialize this? How can we almost create like a factory for that conversion? We feel the same way about Gen AI. How do we build a factory within Vista to help companies with the implementation of their Gen AI strategies and their products and with their customers? And so that's really like our core vision is we want to be, whether you're a private credit investor, whether you're a small cap investor, a large cap investor, we want to be the preferred partner for the providers of capital. We also want to be the preferred partner for these companies that have this transition to navigate.
As you build this software investing factory, what do you think is required in that evolution? Is it just continue to grow and scale? Is it to expand the platform horizontally and add other capabilities?
I would say we feel like we've got so much opportunity in what we've shown to be pretty good at that right now we're focused on that, and we're focused on, really helping our companies with this, in some respects, replatforming into the Gen AI world. So I really see that as the big opportunity for us right now. Again, we're in a market that keeps, rapidly growing, and so I think we can continue to raise very good pools of capital that support that strategy and that we can deliver on for our investors. So I think sticking to our knitting and really making sure that we're helping our companies navigate a really exciting time in the software world is really, what we're keenly focused on.
What excites you most about the future?
I just feel so lucky and grateful that I get to do what I do, and that I get to do it with the people I get to do it with on a very aligned mission. So I've been doing this a long time. I wake up every day. My wife would tell you, I wake up in the morning excited to take on the day and go do this. So I just feel like we're in a space with just, I don't know if I want to call it limitless opportunity, but it feels like just massive opportunity. And I just want to help my partners and the rest of my colleagues at Vista do what we can do to kind of take advantage of that. So that really excites me.
I think you summed up and brought to life so much of what is exciting about this market, what you've done as a firm, and then also just the broader opportunity within software and adding new technology innovation to that. So this was such a fantastic conversation of the software factory that you've built at Vista. So thanks so much, David.
It's great to see you. Thank you for having me.
Thanks for listening to this episode of Alt Goes Mainstream. I hope you enjoyed it. You can read more about alts at my Substack, altgoesmainstream.substack.com. Thanks a lot and have a great day.
We're going